Hi, everyone. I'm Anita Sharma. Welcome to Market Call tonight. Our guest is Tim Nash. He's the founder of Good Investing. He's taking your calls and emails and, of course, tweets on green stocks and ETFs. Our number, toll-free, 1-855-326-6266. Our email address, marketcall@bnmbloomberg.ca. We're on Twitter as well, @MarketCall. Tim, good to meet you.
Likewise. Thanks so much for having me.
You bet. A lot of market volatility. We saw a little bit of buying activity on the market today, but my goodness, you really got to strap on your seatbelt to be navigating these markets. And you have a special focus, which is green investing. How do you manage all of that, especially in these turbulent times?
That's right. So definitely it's been a roller coaster lately. You know, the last few months, it's been tough. Every time I log in, I feel like I'm getting sort of punched in the gut. So really my approach is always to take the long-term view. So I often joke that I'm not a day trader, I'm a decade trader. So if we're looking at this from a long-term perspective, a lot of what we're seeing here is noise. You know, the market did so well earlier this year. And then, you know, in October, November, we've seen a pullback back to roughly where we were at the start of the year. So in my mind, this year, depending how the next couple of weeks go, it kind of looks like it's going to be a bit of a write-off in terms of 2018. So really, this is an opportunity to recalibrate, kind of look at my portfolio, make sure that my plan still sort of meets my needs. If there are things that are down right now where I feel the market has overreacted a little bit, I would view it as a buying opportunity.
A buying opportunity now, or would you still wait? I know it's, no one can time the bottom, but would you wait a little while until you see some calmness in the market,
right,
or are you actually looking at opportunities now to get in?
For me, I'm just not going to try to time exactly which day. So I'm looking at it now is a good time. You know, January is coming around. I'm going to have some more room in my TFSA. So I might wait until then just for the simplicity of getting everything organized at the same time. But really, I feel that when I look at the market fundamentals right now, when I look at the math and the statistics, the economy seems to be doing really well across the board. It really comes down to people's psychology. People feel nervous right now, right?
It's a great point. I mean, all you see is it takes one headline. It's usually on the geopolitical front or between the U.S. and China. But any little headline, good or bad, usually bad, sets markets into reverse. It doesn't take much.
It really doesn't. And so I think people are kind of overreacting a little bit. I think that we're sort of, we're taking those headlines and just sort of running with them and really taking it. You know, part of it is it does feel a little too good to be true. We've been in this nice run for, almost the past decade.
That's right.
So it kind of feels like the sort of Damocles is hanging over us and everyone's just kind of looking up, when's it going to fall? That said, looking at the economic fundamentals, I think there is still room to run. And whereas earlier this year, if you looked at the market in, August or September, it was clear that a lot of securities, especially in the tech space, were overvalued. That's come back down to earth. The PE ratios are a lot more reasonable right now. So I would have no problem putting more money to work in these markets, realizing that if it does continue to fall, if we do have chaos on the geopolitical scene, then, I'm going to take that long-term view. I'm going to rebalance my portfolio. But I always advocate sort of buying into the weakness, that as the market goes down, there are definitely some good stocks out there to go out and do some shopping.
And to your point that you made earlier with respect to noise, there is so much of that, and the breaking news that we got this afternoon on the UK front is that Theresa May, the UK Prime Minister, is managing to hold on at least for another year. She won that no confidence vote within her party, all centering on her failure, or can she push through Brexit? That's really the big question that she has facing her. I'm curious though, you've got a special focus, unlike a lot of our analysts. Your focus is on green investing.
Yes.
At this time of market volatility, what are your clients super concerned about? Is it still green investing, or is it, hey, just make sure I'm in the black by the end of the year? What is their main concern given the beating that a lot of stocks have taken recently?
If I had to guess, I think most of my clients are much less concerned about the state of the markets and much more concerned about the state of the environment. That we saw the climate report come out in the U.S. looking at climate risks. We've got leaders right now in Poland. And really, there's no real path forward. There's not a lot of optimism when it comes to actually tackling climate change as a long-term systemic issue. So I think a lot of my clients are sort of less focused on the short-term portfolio returns, much more concerned about the state of the world and where we're at there. There's a funny dynamic where, people tend to take more action on environmental issues when the economy is good. It's a lot easier to make those investments, but it's when the economy's not so good that it really forces us to look at a different approach. So I'm hearing some murmurings in the U.S. about a Green New Deal. And that would be really, really exciting. But overwhelmingly, I would say consensus right now is pretty pessimistic when it comes to environmental issues, that, a lot of these short-term concerns are taking the headlines, and no one's really sort of watching the world burn.
All right. So pessimism all across the board with respect to climate change, perhaps, oil, a lot of discussion over oil pipelines, if you will. I'm sure we're going to get into this as the hour carries on. We're with Tim Nash. He's the founder of Good Investing, taking your calls on green stocks and ETFs. Our number toll free, 1-855-326-6266. We'll see you in 2 minutes. Welcome back to Market Call tonight. Tim, let's start with an email if we can. This is from Jerry in White Rock, British Columbia. He wants to know about Canadian Solar. It trades on the NASDAQ. What do you think of this company? Yeah,
so Canadian Solar is a really interesting company. They got hit pretty hard when China went big into green technology. So they were one of the largest solar panel manufacturers. And then what happened is it was coming out of the Great Recession when all the other countries, we made a big loan to the auto sector here. China went heavy into green energy. And in doing so, essentially flooded the market with cheap solar panels. So that's why, it has had a bit of a tumultuous time. As well, they did have a bit of an issue when it came to, they spun off a bunch of their renewable energy assets, what they had called a yield co, and there was a bit of an issue there. So for me, this is a company that in the solar space that if you want to bet on the growth of solar panels, absolutely. The problem is that because the price of solar panels has been dropping so dramatically, it's great for us, it's great for the planet, it's really hurt their margins.
Okay, so bad for their bottom line, but overall, from an ethical point of view, it seems to be a good play that the Chinese are heavily invested in this. Yeah, I mean, and that I think that in this space, and it's caused some challenges, definitely from an ethical perspective, like Canadian Solar, I really like it. Looking at the financial piece, it's going to be interesting to see where the solar market goes in the future. But with the price of solar panels dropping dramatically, you have to be a little bit careful investing in this type of solar panel manufacturer. Okay, excellent. Thank you so much for that, Tim. Let's get to the phones now. Mary in Burlington, good evening. What's your question for Tim, Mary?
Hi, Anita. Hi, Tim. Thanks very much for taking my call.
You bet.
Tim, I'm wondering about Interjex, if you think it's still a good company. Thanks very much. I'll hang up and listen.
All right, thanks, Mary.
Yeah, I really like Interjex. This is a Canadian company based in Quebec. They're what we would consider a renewable energy utility. Sometimes I call them a REIT, instead of a real estate, it's sort of renewable energy. And they offer a really nice yield. Like I'm looking at it, I think it's about 5.3% right now. So this has been a bit of a safe haven for green investors, whereas a lot of the tech stuff did slide with the rest of the markets. A lot of these companies that own the renewable energy assets, they've just kind of kept chugging along. I mean, if you want to ignore a lot of the noise in the market, this sector is great for a lot of people looking to invest in renewable energy, but wanting a bit more of a stable return with that nice dividend. I always joke that it doesn't really matter what happens in the rest of the world. As long as the sun keeps shining, the wind keeps blowing, the water keeps flowing, then these types of renewable energy utilities will keep their cash flowing.
It's interesting because even if you look at a 1 year on a company like that, if you do compare it to, say, a traditional stock outside the green sector, if you will, they're just getting hammered right now given the current market volatility. The two stocks that we've looked at thus far, they seem to be holding their own, relatively speaking.
Sure. And I mean, again, it'll depend company by company.
Sure.
With a lot of these, the renewable energy utilities, I do expect them to be a little more stable. And this is when Canadians are looking for dividends, historically, they've looked at pipelines, they've looked at oil and gas. I mean, the banks, they have gotten somewhat hammered, but, continue to be fairly resilient. This is a sector where I think, it's long-term patient capital. These utilities have, in some cases, 30 or 40-year contracts to supply renewable electricity. So if you're trying to, to, get away from that market volatility, this is the type of company that should offer you that nice stable dividend and, provide some stability in your portfolio.
Okay, excellent, Tim. Let's try to squeeze in another call if we can. Anson in Niagara Falls, Ontario. What's your question for Tim?
Hi, I'm wondering what you think of Hempco Food and Fiber, ticker symbol HEMP on the Venture Exchange. I'll hang up and listen to your answer. Thank you.
All right, thank you.
Thank you so much.
This is also making news, the hemp industry south of the border, right?
Yeah, absolutely. So now we are in the world, this is of sort of speculation, right? I believe this, I'm looking at it, it's trading at about 4.5 cents right now. That said, this is an industry where because of the legalization, we're going to see a lot more growing taking place. What that means is that there's going to be all kinds of offshoots. So the waste from the cannabis growers is going to have all kinds of different uses in the food industry, in terms of making clothing, that we've known for a long time. Hemp is a really quite magical plant. It was used to make uniforms for soldiers in World War I, right? So this has 1,000,001 uses, but there's always been a stigma associated with it.
It's big in beauty, too, beauty, healthcare.
Absolutely.
Yeah.
So for me, it's an interesting play. This company in particular, I think obviously, you have to be a little bit careful with it. Oh, and it looks like I might have had the wrong chart there, but that, so I would be a little bit careful about it, that it would, when in the run-up to legalization, there are a lot of people wanting to invest in cannabis, could have become a little bit popular. Now things have settled down a little bit. Will be interesting to see where this sector goes in the next few years, but I think it's very promising. I think that we're just starting to scratch the surface, and I really like moving into these higher value areas. So whether it's clothing, whether it's food, whether it's pharmaceuticals, rather than the cannabis growers and producers, I really like these value-added products.
Well, what's your take on the cannabis industry as a whole? Boy, has that been volatile. And that air certainly came out of the balloon pretty much an hour before it was legalized in this country, and it's been fighting ever since. There's been a couple of big deals recently, Altria being the big one, the tobacco giant, taking a huge stake in Kronos. But what's your take on the industry?
Yeah, so and it's interesting to see tobacco come into it, and that doesn't surprise me. So from an ethical perspective, we do have to be very careful. A lot of these companies have very poor environmental and social standards, that they just haven't really been paying attention to that. Investors, frankly, didn't care in the frenzy that we saw earlier this year, right? They just weren't looking at those issues. But long term, I think that consumers are really going to care about these issues. It wouldn't surprise me if users did shy away from supporting companies that were owned by the tobacco industry. There's a bit of a stigma there now, which is interesting. How times have changed. And so, I worry about investing in the producers because it is a commodity. And as the tobacco growers get in here, they know how to grow plants very cheaply. And they use a lot of chemicals, and they use a lot of very cheap labor in order to grow that tobacco, right? So that's probably going to push price of the commodity of cannabis down. But where I see the opportunities are in those secondary industries, those value-added products and services. I really think that now that that we are in the era of legalization, there's tremendous opportunity there.
And that's where the high margins really are, right? In value add,
But in the frenzy, everyone was talking about the growers and the producers. So those are now the household names in the investment industry, and that to me is where the biggest risk is within this industry.
Okay, we'll pick up this conversation on the other side of the break. Tim, thank you for that information. We're with Tim Nash. He's the founder of Good Investing, talking about green stocks and ETFs. Our number toll free, 1-855-326-6266. Welcome back. We're with Tim Nash. Let's get back to the phones if we can. Tim, David in Truro, Nova Scotia. What's your question?
Yes, I'd like to ask the guest about Brookfield Renewable Energy. It's about 30% down from its high. I picked it up a little below this. It pays a nice dividend. And do you own it? And would you be buying at this level? Or should I be adding a bit more to it? Brookfield seems to have great companies, and And I know a lot of people talk about BAM, the parent, but I'll hang up and let you feed me some information.
All right, David, thank you. Feed this gentleman some information. And to David's point, Brookfield certainly is a rock star with several of its holdings. David said that this stock is down about 30%. Is it time to get in?
Yeah, I mean, I'm looking at it right now. At this lower price, the dividend yield is 7%, which is just phenomenal. Right, so this is definitely a situation now. I don't own this one directly. I know I have a number of clients who do. For me, this is a play, or this is a company that really works well for people who are a little bit older and who want that dividend in their portfolio.
You're not seeing the growth. You're not seeing the stock growth at all.
And I really wouldn't expect this to grow. You know, if the thesis is that there's going to be a green bubble and that, you know, that it's going to sort of explode these tech stocks, then this company would not capture that. What I do expect from this is sort of a blue chip company with the Brookfield sort of marquee name. They really know how to manage these assets. I am seeing a little bit of growth in their pipeline of projects where there are a nice few things coming down the road. But to me, anytime this pulls back, that means when I buy more shares, I get a higher dividend yield. So to me, definitely looking at the fact that the share price is down over the last couple months, to me, if I did own this position and I liked it a few months ago, I would like it a lot more today. So I would consider, David, you know, if you wanted to add to your position, I would sort of have no problem with that. You know, ultimately, this is going to be in that field of renewable energy utilities, which is a little bit safer. So you're going to avoid a lot of the heavy volatility and get a nice dividend in return.
Okay. Thank you, Tim. Back to the phones. Jerry in Toronto. What's your question for Tim? Good evening.
Good evening, Anita and Tim. My question today is about the green organic Dutchman. I actually asked you about this last time you were on, and it's dropped, I think, about 50% since then.
Wow.
And it's dropped a lot more than the rest of the cannabis stocks, actually. So I was just wondering what your opinion of it is now. Do you think we should still hold it or get out of it and go to other greener pastures, as they say? Anyway, I'd like your thoughts on the fundamentals of the company and what you think we should do about it. Thanks.
All right, excellent, Jerry. Thank you. Your thoughts on this company. We understand they're still blazing a trail, though, into international cannabis markets. Could that help this company? Yeah,
absolutely. And I mean, this is a sector that gets bought and sold based on news. Right? So it's fascinating to see, and, you know, the old adage was, you know, buy the rumor, sell the news. And when it came to legalization, that's exactly what happened. That everyone got excited about it leading up to, I believe it was September 17th or something like that. And then right on cue, as soon as the news dropped that legalization went ahead as planned, the sky didn't fall and it became legal, that right away we saw investors get out. And that this company, I mean, it's not making a profit, right? So this is on the riskier side of the equation. What I like about them is the differentiator, that because they do focus on organic products, if we assume that a cannabis consumer is going to care more about that issue, if this sort of hippie stereotype is true, then I could see this brand doing very well. I could see this company continue to grow as well. It's nice to see them move towards those higher value products rather than just growing. But this is a sector that's going to be volatile. So, in all honesty, if this is what you really have to accept the roller coaster if you're going to invest in cannabis, understanding that I think there is great long-term potential, and certainly I would consider this to be sort of the organic or the best of that group. When it comes to understanding the environmental implications of growing cannabis. But it's going to be a roller coaster, and I can think of different news and legalization in different markets, and as that stigma gets destroyed in other parts of the world, I can see the sector rebounding, but I think it will take some time.
Okay, Tim, thank you. Let's get to a tweet now. This one is from B. Shane, or Buddy. He's got a question about ABB Group. Is it connected enough to green? He wants to know if you would share your thoughts on this company. It looks like ABB and Hitachi are in talks on a potential deal on power grids.
Yeah, so ABB is a really interesting company. They focus on smart grids. So this is a company that builds the grid that'll connect renewable energy projects to that grid. Now, it's an interesting time right now in terms of grid development. Certainly, most of the world has power grids, but they're so old. I mean, here in Ontario, our grid is ancient. So it's really old. It really struggles when dealing with a lot of these renewable technologies because they tend to be a bit more intermittent. So something like wind that blows at kind of odd hours of the day, that can put a lot of strain on the grid. So if you accept that a lot of countries need to update their grids, and as well,
to smart grids?
You got it. So this is absolutely a play on smart grids, adaptive, responsive, right? So, that said, certainly here in Ontario, we saw a big issue about energy prices and consumers being very, very upset. Now, a big cause of energy prices going up here was less about the wind farms and the solar farms, and it was much more about updating our grid, that it's really expensive to build out smart grids. So it's one of these, situations where if we saw more infrastructure spending, if we did see a bit more of a stimulus package, upgrading the grid is something that we need to do. But that said, a lot of governments and a lot of utilities around the world are probably happy to ride out their older grids. So
when you're talking about the Canadian situation, you have to also add the fact that the oil and gas situation, it is arguably quite critical, many would say, for this country. You would think that in many folks' eyes, that would take precedence, at least at this stage, because it just seems to be screaming out more for attention.
So, definitely.
Your eyes are lighting up. You disagree.
I'm getting asked a lot about this question right now. And, and for me, it's really tough. And I want to say that, my heart really goes out to the employees, that there are a lot of people, there are a lot of workers in Alberta within that sector that are on hard times right now. And it's not just them. There are also employees in Oshawa, Ontario, with the closure of the car plant. A lot of cab drivers, here in Toronto. That innovation is often disruptive in a way that's really, really bad for people who work within that sector. That said, a lot of the skills that are required in the oil and gas sector are the same skills that are required in the renewable energy sector. And that certainly if you're used to, and if you're an electrical engineer in Alberta that is now out of work, looking at smart grids and kind of getting a little bit of retraining, but using a lot of those same skills that you've got, this is a sector that I think has a lot more growth potential when we look at the next 10 years, 20 years, 30 years. The oil sector is going to be in trouble. We're seeing the shift towards renewable energy. We're seeing a shift towards LEDs, which I'll be talking about in my picks, and electric vehicles, that it'll be interesting to see what happens for the demand for oil. At the same time, we're seeing a lot of supply. There's no shortage of oil. They just found a giant new reserve in the U.S., right? And they're obviously going full steam ahead. So it's going to be a tricky time if you're banking on high oil prices, right? Demand does not look great in the coming decades, and supply is actually looking higher than expectations.
Well, it's tricky all around, right? Because for better or for worse, some would say for better, some would say for worse, this is an oil economy. And what's happening in Alberta, it's not even isolated to Alberta, these depressed oil prices that we've seen. Many would say, and I'm sure you'd be in the camp, look, we can't be a one-trick pony. We need something other than oil to prop up the Canadian economy. But it's all about balance, isn't it? While you have the oil economy, nurture perhaps some other areas, some other sectors that at some point can work in tandem with oil. But right now, Tim, it really is an oil economy. And you got to work to buttress that, to support that any which way you possibly can. That's what some would say.
And so I would argue that, yes, we absolutely have a dependency right now. What I tell to investors all the time is diversify, diversify, diversify. And that's really what we need to do in Alberta, in Canada, across the board. We need to move away from a commodities-based economy. We've seen all these boom and bust time and time again. It's just a matter of time before we go through that roller coaster.
Okay, speaking of time, we're out of time. We got to get to a commercial break, but we're coming back with Tim Nash's past picks. Please stay tuned. Welcome back over to Tim Nash. Time now for your day of reckoning, as they say, your past picks. Let's start with the iShares Low Carbon Target ETF. And you're down a little under pressure here by 8%. Yeah. Are you still in this?
Yeah, for me, this is an ETF that tracks the All Country World Index. So
Okay.
this is the global stock market. So what this has done is this tracks that All Country World Index and then slightly modifies the weightings based on the carbon footprint. So I have no problem with this. This would be, instead of your Vanguard total stock market ETF, this would be a low carbon alternative to that. So as the global market has fallen since I appeared on September 4th, this has gone down in tandem with that. So this would really, to me, this is sort of the benchmark here, right? And absolutely, I mean, I think it makes sense for investors to own the entire stock market. I'm a big believer in diversification and in passive index investing. This is a way for investors to have that passive
that exposure
index approach in a low carbon, not fully fossil fuel free, but moving in that low carbon direction.
All right. So we make an ethical investor perhaps feel a bit better about trading the market with that little added incentive there. How about your second pass pick? This would be iShares Global Water Index. Now here you're doing a little bit better, still underwater, no pun intended, off by 5%.
Yeah. So, I mean, water as a sector, so this is primarily industrials and utilities. So it's been those utilities that have really sort of buoyed it. It hasn't fallen as much as a lot of other sectors. But on the industrial side, I mean, industrials are down sort of across the board. So it doesn't surprise me that this is in negative territory since September. But understanding that the way the world is changing, we have a lot of regions that have too much water where they're going to get flooding. Here in Toronto is a great example where, every so often we get a big flood. We need to invest in better water infrastructure. And there are certain parts of the world like South Africa right now that are experiencing massive droughts. And so as climate change gets worse, governments and municipalities are really going to have to invest even more heavily in water infrastructure. So I would expect this to continue. I own this ETF and I continue to own this ETF. I would have no problem adding to my position.
It's a huge source of concern south of the border as well. You look at the coastal areas, you look at what's happening in California, in Florida, Las Vegas, Nevada. It just really is at the forefront. A lot of folks say Canada in some ways is sitting pretty with respect to water.
Yeah, we have a lot. I mean, we've got, with these Great Lakes, we are so blessed in terms of our access to fresh water. So a lot of the issue here is going to be too much water. So flooding can be a big problem if we're not careful about it. And then, but that I do see a lot of stress in this area with growing climate change.
Let's get to end this on a positive note. Hannon Armstrong, this did quite well for you given the volatility in the market. You're up about 10% here.
Yeah. So, I mean, this is one where I didn't expect this. Obviously, while the rest of the market is down, we saw the same thing, I believe it was with the Interjects, where that hadn't fallen nearly as much. A lot of need for sustainable infrastructure. This company has a great niche. Biggest issue is the financing. A lot of these projects have great cash flows, but you just have to pay for it up front. So with them providing that upfront financing, I think as investors are looking to have these sort of green, sustainable infrastructure investments, this will be at the top of the list.
Okay, excellent. Tim, thank you so much for that. Our number, 1-855-326-6266. We're getting back to your calls next. Welcome back. Back to the phones. Victor in Toronto, what's your question for Tim Nash?
My question is regarding Polaris Infrastructure, ticker symbol PIF.
Okay.
Does he own it? Does he like it? And is there further downside on this one? I'll hang up and listen. Thank you.
All right. Thank you, Victor. What are your thoughts on Polaris Infrastructure?
Sure. So, Victor, I don't own this stock individually. This would be sort of too small for me, I'll be honest. It is a smaller company, market cap about 155 million. So I tend to go for larger companies in my portfolio. But it does pay a really, really big dividend, especially with the price pullback recently. I think it's at about 8.2%. Now, this is definitely on the riskier side for these renewable energy utilities. They own geothermal energy projects in Nicaragua. And I love geothermal. So from an ethical perspective, I totally give this one a thumbs up. That said, I think they've only got a couple projects. It takes a long time to develop those projects. So I would like to see a little bit more coming through on their project pipeline to be able to have the company be a little bit more diversified before I would buy it myself. Right? Because they pay such a high dividend, that's really going to impact. Yeah, but that's really going to impact their growth. So what it means is that they're giving all their profits to investors, which is like great, but that means my concern is that they're not going to be focused on building new projects, on diversifying their revenue sources. So to me, this would be a riskier play on these renewable energy utilities. Certainly does give us some exposure to Latin America, and I do see tremendous potential in terms of geothermal, that really getting that baseload power, it's such a consistent source of energy, literally like from the earth, that if we can get that right, this has the potential to be big. That said, with this company, I'm just not sure they're being aggressive enough. Instead, what they're doing is they're paying most of their profits to in dividends to shareholders, which, it's great. If you're a shareholder and you're getting that 8% dividend, fantastic.
But you're looking long term, and
right.
you want to see this company invest more of that cash and perhaps boost their bottom line.
That's right. And for me, this, especially with geothermal, I think that there is such potential there in a lot of different geographies, that if they can establish themselves as the global leader, then way more opportunity than just simply running a few projects and being a bit of a cash cow for investors.
All right, Tim, thank you. Back to the phones. Tom in Windsor, Ontario. What's your question for Tim?
Yes, Pattern Energy has been doing quite well. Do you think the dividend's safe, and do you own it? Thank you.
All right. Thank you, Tom. It really is all about the dividend, especially on tonight's show. These dividends are quite sexy. I'm not going to lie. Yeah.
Right, and this is a product of the market pullbacks, right? So because prices have come down to some degree, what that's done is it's pushed dividends up even higher than they were before. But again, these are companies that do tend to be stable. I'd want to look it up. I don't have it at my fingertips, but
what would you like, the dividend?
If he was actually the price to book ratio,
okay,
right? So that really to me is when it comes to these bigger term larger projects, these dividend paying companies. Really, we want to look at how much debt they've got on the books. If the question is around the sustainability of that dividend, really it's going to come down to have they overextended. That's the risk with paying a big dividend, right? Is if you have too much debt on the books and the economy turns, right, all of a sudden paying that dividend out can become a big burden, right? So it's one of these double-edged swords where investors love the dividend, but the question is always going to be, making sure that the cash flow is sufficient to be able to service that debt, to make sure that hopefully they can continue to build new projects, to acquire new projects, to be able to keep growing their portfolio in order to increase that bottom line.
And just looking at their PE, it is interesting. The estimated PE is 17. So it's trading, 17 times earnings?
Yeah. And so for me, it would be the price to book ratio, just looking at the debt side. But that really, that would be the cautious. And I mean, certainly by all means, if you're looking at individual companies, just take a look at their balance sheet. See how much debt they have on the books. If you feel that it's excessive, right, and that they have more debt than they can really handle, then that would be a bit of a red flag. I haven't seen any major issues when it comes to Pattern Energy. That to me, this is a company that I like from a sustainability perspective, and that I'll continue to like as long as they keep earning those cash flows and paying that nice fat dividend.
Okay, let's see if we can get that information for you a bit later. But in the meantime, let's get to another call. This would be... Actually, we'll take a break here, and we'll get it after the break. We're with Tim Nash. He's the founder of Good Investing, taking your questions on green stocks and ETFs. Call us toll free, 1-855-326-6266. Welcome back. We're with Tim. Let's just tie a bow, if we can, on Pattern Energy. So we did get the information. The price to book for Pattern seems to be 2.41. That's in line with what you were looking for.
Yeah, I would look like, really in the range of 2 is sort of, what I would say. If it's less than 2, then that to me shows a really, really strong ratio, where if it's, as soon as it starts climbing up over 3, that's when I would see it as a bit of a red flag. So if it's in that, sort of 2 to 2.5 PV ratio, then to me that makes sense. Like, I think they should be able to find that balance between paying the dividend and then also acquiring new projects.
Okay, excellent. Thank you so much for that, Tim. Back to the phone. Stephen in Vancouver. What's your question for Tim?
Thank you for taking my question. I'm extremely interested in this environmental friendly investments. Mm-hmm. I wonder, sir, if you can kind of give me some leads into some Canadian dollar-based ETFs or Canadian dollar hedged ETFs, hopefully in the in energy as well as the agricultural side. Thank you so much.
Excellent. Thank you, Stephen. So we talked about this off air. There does seem to be growing interest, and you're seeing this on your client side. More folks are moving towards this more than ever.
Yeah,
this ethical investing, this green investing, if you will.
I mean, this is a trend. Like, people get it. That really, when it comes to environmental issues, this is not, sort of the tree hugger, the fringe thing. This is now absolutely
got to be
crucial.
able to make money, though, too.
100%. And but that's the beautiful thing, is that by so many of these green technologies are actually allowing companies to be more profitable. So energy efficiency, right? Now we're seeing with energy storage, like, who doesn't want a better battery for their phone? Right? So all of these things, it's the innovation is really driving it forward. Now, to the caller's question, to Stephen's question, there aren't very many Canadian dollar ETFs. I can't think of one off the top of my head besides the global water one. Mm-hmm. But and that might fit a little bit in terms of the agricultural space, because water is such a big issue there. But certainly wouldn't hit the energy space. There is a really interesting new mutual fund that Mackenzie, they partnered with a firm called Greenchip Financial. They now have a retail product. It is a mutual fund, so for online investors, they might consider looking at the F series of that fund to be able to get the lower fees. So I really think that there's a bit of a gap, that right now all of my favorite green ETFs, and frankly all of the green ETFs, are traded in US dollars on US exchanges. So
is it better just to bite the bullet sometimes?
Yeah. Or? So I mean, for me, it's the currency risk, especially if you're going to be globally diversified. You're going to be exposed to currency risk anyway. There's no way around that. All Canadian brokers let us buy US dollar ETFs. There is the currency fee, so there's this nifty little trick called Norbert's Gambit that I love to teach clients. Yeah. So this is a way of being able to convert money between Canadian dollars and US dollars without paying that
1%?
Yeah, it's usually about 1.5. It depends on the bank. So by using Norbert's Gambit, and there's some great online guides people can see on YouTube and get those tutorials. So what I would really suggest for Stephen is, don't limit your options. Consider the US dollar ETFs. Just understand that, it might require that extra little step of converting everything into US dollars.
Okay, to get a better return, to maximize your returns, you're going to have to venture into that space, the bigger pool.
That's right.
Okay, Tim, thank you. We'll be back with Tim Nash. He is the founder of Good Investing, taking your questions and calls on green stocks and ETFs. Our number, toll free, 1-855-326-6266. We're also on Twitter at Market Call. We'll see you in 2 minutes. Welcome back. We are going to the phones now. Dave in Kenora, Ontario. What's your question? Good evening.
Hello, Anita.
Hi.
I'd like to ask your guest about Lithium Americas, their projects coming along nicely in Argentina, and I'm just wondering what his thoughts are as to Lithium Americas going forward. Thank you very much.
Excellent, Dave. Thank you. Lithium Americas. Are you bullish on this stock?
So it's so tricky. So this is a scenario where, again, it's a commodity. Yeah. So I like the space that lithium is in. I think there's tremendous growth in lithium-ion batteries and technology. As we move towards electric cars, we've always been waiting for sort of that new battery that's going to change the world and, it's going to charge right away, and it just hasn't happened. So where the market seems to be focused right now is on making batteries as cheap as possible. And so we're using the technology, the best technology right now, lithium-ion technology, and making it as cheap as we possibly can. What this means is that I do expect to see increasing demand for lithium in the coming years. What I don't know is what's going to happen on the supply side is now that we're moving in this direction, if this company is increasing output and a lot of other companies are bringing lithium mines online, right? This is a scenario where demand for lithium could continue to grow, but the price for lithium could stay where it is or even fall. So it's very, very hard for me to predict what's going to happen within that sector. I would say that I think there is going to be that strong demand. So I would feel confident from that perspective, but I'm always going to be cautious when it comes to investing in these types of commodities, and especially since, there is so much research and development going into energy storage. We can talk about hydrogen, we can talk about all these different competing technologies, and all it takes is for that little MIT breakthrough where now all of a sudden, we have this new technology, and at that point we could see demand for lithium fall quite dramatically. So, I would say take a very, very cautious approach to this. If we do feel that this trend towards electric vehicles is going to continue outperforming expectations, which it has, then, I could see growth in this stock, but I would be cautious from that long-term 10, 20 years perspective.
Okay, Tim, thank you for that. Let's take another break here on Market Call tonight. We'll be back, though, with Tim's top picks. All right, it's time now for Tim Nash's top picks, and let's start with Change Finance, the U.S. large cap fossil fuel free ETF. That's a mouthful.
Yeah. So it is a mouthful, and it's a really great ETF. So this is an ETF that tracks the U.S. economy. So basically, I would swap out, a standard S&P 500 ETF for this. So rather than owning SPY, this is something you could own here. You can see the chart looks a little bit funny, and because it doesn't have a huge number of assets. And this is something that investors need to be really cautious about as we talk about some of these more sustainable ETFs. They don't have a lot of volume. They're not traded as frequently. So investors need to be really careful, maybe use a limit order, right, rather than a market order when purchasing them. But was the first ETF that tracked the U.S. market that was both socially responsible and fossil fuel free. So if you wanted to get rid of all fossil fuels, and you also wanted to get rid of guns and tobacco and a lot of these sort of quote-unquote sin stocks, was the first ETF that really gave us that broad U.S. exposure. So again, it's a bit of a tough, funny time to invest in the U.S. right now, especially as an ethical investor. You've got Trump in, so we might want to give this one a little bit more time to be able to get some more assets under management. But it's been around for about a year now. The performance has been about the same as the S&P 500, which is what I would expect. But this is a great way for, again, those sort of couch potato investors that are looking to divest from fossil fuels to invest in the U.S. economy.
I was just taking a look at a couple of the stocks on there. They're very recognizable. CVS as well as Starbucks, which we know has a huge human resources initiative, if you will. Yeah,
so these are large cap companies. So even though the ETF is sort of thinly traded, you look at the underlying assets, I'm very confident there. But what it does is allow us to get rid of sort of the worst of those American large caps.
Okay, let's get to your second topic now, if we can. iShares MSCI Global Impact ETF. Why do you like this?
Yeah, so this is the first ETF on the market that tracks the UN Sustainable Development Goals. So this is an initiative by the UN to start to standardize what it means to talk about sustainable development. And so these are companies where they sell products and services that are aligned with one or more of those sustainable development goals. So we do get broader international exposure here. This is global, and there is exposure to emerging economies. And what I would say is that it's not perfect here. You look at some of the companies in here, Procter & Gamble, I don't think people would say, oh, they're really out there changing the world. But this this is a great way for investors to invest in companies that are aligned with those UN Sustainable Development Goals. It's kind of the first attempt at what I would call an impact investing ETF, and I'm really excited to see where it goes.
And you're excited about Universal Display Corporation as well. Now, this is a play on tech, if you will.
That's right. So this is more on the sexy side. This is more so, and really this looks at the revolution that's underway within the lighting industry.
Right.
And we've seen it's now a no-brainer to shift to LEDs. Everyone knows LEDs.
They're everywhere. Everyone's kitchen.
You got it.
Yeah.
And so these are organic LEDs, OLEDs. You can look at the ticker symbol there. They own the patent rights to OLEDs, and they license it. So the new Apple iPhone 10 uses OLEDs. Samsung is working on a foldable smartphone using LEDs. So when you look at the next generation of technologies in television, in phones, cell phones, in lighting, that pretty soon you're not going to have a socket anymore. It's just the whole ceiling is just going to be covered in LEDs, and you're going to have this beautiful, nice light that you have complete control over, right? It'll never be too bright. This is the end of the lampshade, right? Because instead of a centralized light, it's a nice, beautiful, diffused light.
Very quickly.
Yeah.
What is your clientele? What is your demographic? Very quickly. We're almost out of time. I'm curious.
So my clientele are do-gooders. These are people who are usually adults, individuals, families, absolutely anyone who cares about environmental issues. These are people buying organic and fair trade. They're realizing they want to take those same ethics to their investment portfolio.
All right, Tim, well done. Good to meet you. Good luck. Happy trading, folks. Happy trading to you too. Consult a qualified financial advisor before making any investment decisions. Have a great night.